All right, this is Enda here, bullwaves.org. Just going to check and see if this is recording. I think it is. So it's Saturday. I didn't get to do an update last night on the website, as I mentioned to you. So instead of doing a literary update, I'm doing an oral update. So you can hear me instead of reading my words. And I'm going to put this on YouTube as well. So this will be, if you're out there in YouTube land, welcome. This is bullwaves.org. This is Enda. Check out the website, and if you like nightly Elliott wave updates, that's what I do. All right. Here we are. This has been quite the week, I think. And I'm just going to get into it. We had a bit of a tragedy around locally here this morning, so a little bit circumspect, I think. Anyway, let's move on. The reversal, we had this is euro dollar, obviously, so I'm going to go do the dollar crosses first. This is euro dollar. We had a big spike and a big reversal this week. So we were looking for a fifth wave spike. It's been a couple of weeks, so we were working on a fourth wave correction. The last time I was probably speaking to you, we were looking for a fifth wave spike this week. We got a fifth wave spike. I'm not quite sure if it's finished yet, but that rally closes out wave 3, I think, and then we should look for a fourth wave decline, and that may or may not be underway. It's hard to know just yet. We haven't crossed below. You can see on the hourly chart here, we have ABC down in wave 4, rally up in wave 5. We haven't crossed below that wave 1 high, so we could still see a fifth wave peak out in wave 5 of 3. So far, the decline, you could probably call it both ways. Even if we do get a rally, it's probably not going to go much higher than what we already had. So it may be, splitting hairs here to say that wave 5 of 3 will happen, and wave 4 will come afterwards. Probably just going to be a spike and reversal anyway, even if it does come. So I think in the medium term, over the next couple of weeks, we'll probably, stabilize. If this count is correct, then we'll peak out in wave 3 if we haven't done that already, and then we'll stabilize into a corrective fourth wave move lower. And I think probably back between 106 and 107, we'll bottom out in wave 4 and then turn higher into wave 5. And you can see on the daily chart here, this is what I'm kind of tracking: a wave 1 up. This would be wave 1 and 2, then extended wave 3 pattern, what we experienced at the close of this week. Fourth wave correction, and then fifth wave high. So it'll be 5 waves up in wave 1, and then another correction in wave 2. So it's swings and roundabouts, up and down. It's the beauty of Elliott wave. We can expect a rally and then expect it to be completely retraced immediately. Okay, let's go on to pound dollar. You see that's the daily count. You can see that's the wave 1 and 2 pattern we've been working with. This is the wave 1 rally of wave 3. I think we have topped out wave 1 on this. So this is the 4-hour count. You can see that we've probably got 5 waves up done here in wave 1, and we're working on 3 waves down in wave 2. The internal pattern here, I may as well move this on. So we've got a wave 1, wave 2, and then a 5-wave pattern here. So an extended third wave, wave 1, 2, 3, 4, and 5. So that's wave 3. And then we have wave 4, and then wave 5. Okay, up you go. Come on. Now, that's 5 waves up in wave 1. I think the reversal this week it's broken the previous fourth wave low. It's sharp enough to at least expect an A wave down, probably 5 waves down. So if this is 5 waves down in wave A, then we're probably going to see a zigzag correction in wave 2. And if it's a zigzag correction, that's like 5, 3, 5. It'll probably be quicker than you might otherwise expect. So it'll be a quick jolt. Could even be done by the end of next week. I'm looking at the 125 level. That's 62% retracement of the wave 1 rally. So wave 2 retrace back to about 125, and then we'd look for wave 3 up. So 3 waves down this week. That's the hourly chart. There's not much else to elaborate on that. We may even have 5 waves down done already in wave A. So 3 waves down, in wave 2 this week, and once that's complete, then we'll look higher in wave 3. Okay, so here's dollar yen. The pattern in dollar yen kind of got wiped out and then confirmed, and then wiped out and then confirmed again. So I think we still have wave 1 up. This could be wave 1 or it could be at wave A. It's hard to know actually at this moment in time. So 5 waves up in wave 1, then expanded flat correction wave 2. So that's what's changed this week. It's expanded flat correction wave 2. And then we've got 5 waves down in wave C of 2. Of course, the 4-hour count here. We've got a 5-wave pattern lower in wave C of 2. We almost hit the 78.6 retracement this week. We do have 5 waves lower this week, so that could complete wave 5 of C. And once that was complete, we'd be looking for a bounce back out above the previous 4th wave high. So that 4th wave high, let's get a level on that. That'll be 151.20. So if that's wave 5 done, and if that bounce on Friday is the beginning of wave 1 up, then we are expecting 5 waves up in wave 1 to break 151.20. And we'll see how that goes. The decline into wave 5 worked out pretty reasonably well this week, on Friday, and we've reversed reasonably impulsively off that. So we could be seeing a bottoming and a return higher in wave 1, and I would expect that with the action that has happened in the stock market. So let's move on to the stock market now. So I think the last time I spoke to you, we were tracking this wave 1 and 2 pattern, and I think the last video was something like, next week is the test or something. Next week it passed the test. We had a wave 1 and 2 decline off the wave 2 lower high. So we had a 1-2, 1-2. And then this week we had an acceleration. So the acceleration lower could be a third wave. So what I'm actually suggesting now is we've got a series of 1-2s, then a third of a third acceleration lower, which would explain Thursday's and Friday's action. I don't think that third wave is done yet. If this is wave 1 down in green, and that's wave 2 up in green, and then you would take the extent of that wave 1 and project it off the wave 2 high, that would give you a minimum target of about 38,400, and that's what the pattern was suggesting even last week. But the extended pattern in wave 3, let's get a label on that. Excuse me. So we have wave 5 of 3. So the extended 162 Fibonacci extension of wave 1 suggests about 35,600, 35,700, somewhere down around there for an extended wave 3 to reach. So we'll see how the reaction on Monday happens. If it's a bounce, if we get some sort of corrective bounce, that'll probably be a 4th wave. And then we would look for a turn lower towards the middle of next week in wave 5. So that'll be 5 waves down in wave 3, somewhere down around 36,000, let's say. And if I am correct here, then we are tracing 5 waves down in wave 1, blue. And given that today is the 6th, the 5th of April, we put in a high on the 31st of January, somewhere around, just coming into February. 2 months ago, we were at all-time highs. And now the action has, retraced probably this week alone, we've retraced back to April last year, sorry. So we've done a round trip back to this time last year in the space of a couple of weeks, which is quite interesting. And this is the type of action that we would be expecting in an impulsive reversal of the market. So if this is wave C down coming our way, and it's a long way down for wave C, then we would expect 5 waves down. First of all, we would expect it to be quite impulsive. We would expect large retracements back to key supports pretty quickly. We have large retracements back to key supports. We have a possible 5-wave pattern developing. The next stop, I think, for wave 1 down is the wave A high, and that's there's ABC up in wave B. So the wave A high comes in at 34,900. So a break of 35,000 would be the target for wave 1 in blue. And then, of course, a big, bear market rally in wave 2. But let's see, we need 5 waves down in wave 1 first. And that will probably take another couple of weeks. So, if this is the top, if this is the turn that we were expecting, that the count was kind of suggesting, then we've made quite a good. You can see we're actually just about to do create a dead cross on the daily count here. Then we've made quite good progress this week towards that initial 5 waves down, and we have retraced quite a lot of action. Back into at least a year ago. So we've done a round trip in a year, gone to new highs, and we're now back below. We're actually approaching the previous 5th wave high. So that's the 2022 high. We're approaching that quite quickly. I would imagine we might even see a bounce of wave 3 off that 2022 high. So 36,900, not 36,950, in around there for wave 3. So you can see tracking 5 waves down in wave 3 in green here. If that's a major acceleration lower this week, so that can be taken as wave 3 of 1. So third of a third, that's where accelerations should happen. And now let's see what the bounce is next week. See if it comes, see if it's sustainable, see if it's kind of, if it consolidates, it's probably a 4th wave. So I would like to see the wave 1 low hold as any correction actually does take place in wave 4. So look for a bottom in wave 3, turn up in wave 4, and then a turn down again in wave 5. So 5 waves down into wave 3 low. That's what I'm looking for this week. Okay, so let's move on to gold. So the daily count in gold. The last time I was talking to you, I was looking at this channel that was filling, and I think I was quite, new for me, but bearish. I was looking at a possible throw over in a fifth of wave 3. We do have 5 waves up now into wave 5 of 3, and it's wave 4 that's next on the list if this count is correct. So wave 4 down, we're looking at a clean 50% decline. So the action this week, while it hasn't confirmed anything, but it's definitely moving in the right direction. I would like to see a break of that previous rally here. So the final kind of terminal rally in wave 5 green. First of all, we should break that. So that brings us down to about 28.30 for the initial move down into wave 4. So this would be wave A of 4, a very large degree wave A of 4. So we'll just keep tracking it. I mean, the reversal is quite good so far. We've only got 3 waves down so far, so want to see a clean 5 waves down, and that's kind of what I'm showing on the short-term chart. It will depend on, let's say, how the initial reaction is early next week to see if this count is correct or not. Given the fact that this is wave A of 4, let's go out to the daily chart again. Given the fact that this is wave A, you go away, you come back here, and we get rid of that. So we're looking for ABC down in wave 4. Forgive me, I'm just talk amongst yourselves there for a second while I do this. Now, ABC down in wave 4, and this is probably going to take the next, at least the next year, maybe even more. We'll see how it goes. We haven't got confirmation of this yet. So the initial wave A, I would like to see at least break, 2,500 and that'll be 3 waves down, most likely in wave A. And that's the, that initial target is a fourth wave low, but it's not the previous fourth wave of one lesser degree. It's actually two. No, you're right. Sorry, forgive me. It's one lesser degree. The previous fourth wave low of one lesser degree. So we've got that as an initial target for wave A, but I wouldn't suggest that would be the whole extent of wave A. I'd like it to probably go a little bit lower than that, maybe even challenge the previous wave one high about 2000. So we'll see how this goes. It could get quite hairy for the gold market right now. We have got 5 waves up. We've got a complete pattern in wave 3. We'll see how the reversal goes. Like I said, the initial target is the first fourth wave low, so that's about 28.30. If we break that level, that probably will be good enough of an indicator to suggest that wave A is underway. So let's see how that goes this week. So we're looking at 28.30. We'll see how it goes. I would just remind you that the target area for that fifth wave high was at between the 100 and 162% extension of wave 1. So we have wave 1 here that's extended off the wave 4 low. The initial target would have been just above 3,000, about 3014. So, and the upper target is about 3130, and we got to about, what was it, 3070 or something like that, in around there. So, and it was a clean 5-wave rally, and it was an impulsive reversal. So, all the little check marks are all the little boxes are being check marked now. So a larger reversal, I think, is beginning off these highs. Okay, let's go to crude oil. And I think our count in crude oil was given a very decent boost this week. You can see we were looking for an acceleration lower in a third wave. That's the weekly count. This is the daily count here. Sorry, the fifth wave. I've got to update that weekly count. So we had a fourth wave triangle all the way into the 24 highs. Some are 24 highs. Then we have a wave 1 and 2 out of that. And now we have a wave 1 and 2, 3. So this would be a third of wave 5. And wave 5, we're looking for down below $50, maybe even down below $40, probably even lower than that as we go. For our count, you can see here, this was a wave 1 and 2 this week. We had a 50% retracement of wave 2. We were looking for a top. It turned very, very hard. So we are well into wave 3 of 5 here. The internal pattern here is actually quite difficult to parse out at the moment because it's the action is so hard packed together. It took 2 months to rally into that wave 2 lower high. To go from 65 to 72, $7. It took 2 months to go $7, and it took like 2 days to wipe that out. So that's impulsive action for you. It looks like we have an extended wave 1, maybe. That this was the count from Thursday that I'm manipulating here. I was looking for one more step down into wave 5. That step down came really hard. So I don't know if maybe I'm being too conservative in my labeling here. I could be going up 1 degree, and if you go to the 4-hour count here, we've already come so far in what we would have expected in wave 3. So the minimum target for wave 3 in blue here, in this wave 3 here, is at down around below $60. So down around $58. That is quite the extended pattern here. No, that's quite the extension so quickly. So while we haven't reached the minimum target for wave 3, we're very close to that right now. So this could be all of wave 3, quite tightly bunched. It's like a spring uncoiled here in crude oil this week, and it's hard to keep up with. So in general, on the daily count, this is a 1, 2. This would be wave 3 of 5. So we'll keep an eye on that one as it goes. We're going quite well. We're back down. We are now at like lows Not seen since what, August 23, so 2-year lows nearly. Well, coming up on 2 year, 18 months lows or more on crude oil. So that is a whole lot of action to nowhere. And finally, maybe the world is starting to realize that there's just no there there. There's no power there. The stimulus has run out. There's no time or no ability to fund further expansion. And I think the crude oil market has been saying that for a long time, actually. I think I've said that a few times, speaking about the crude oil market. Okay, let's move on to the S&P. This is the daily count of the S&P. What a reversal! We're back down to below the 2022 lows. We're back down. Sorry, below the August 24 lows, back into the April 24 lows. So a whole year of upside has been wiped out in the last week and a half or 2 weeks, let's say, since the last time we spoke. Actually, I haven't got a wave count on this right now on the daily chart, but I think it's quite interesting to see how far we've come and how quickly that decline has been. So this does kind of elucidate, let's say, how unsustainable that rally was into the previous highs. Even though we got there, it wasn't sustainable. We topped out just above the 62% retracement, or sorry, 162% extension of wave A. So this is wave A up, wave B down, wave C up, 162% extension, and now we've got a death cross on the daily chart for all our effort. So top came in. If this is a large wave 1 down, then this wave A high is the main target for that. So that's 4,600. That's 1,400 points off the actual top. So that's quite a turn for an initial decline. So here's what I'm tracking right now. Again, just like the Dow, third wave extension. So it's to be a third of wave 1. So this wave 1, I will put in here. And like I said, you can't even glean very much from the hourly count because it was so tight together. But on the 4-hour count here, you can actually see the 1 2 1 2 extension and third wave. So wave 4 and 5 should come next week. And I'm kind of looking around be the wave B low, I think, 4,900. A break of 5,000. Well, that's quite easy, I think, right now in wave 3. 4,900 marks the internal wave B, I think, of wave 3. So that would be an ending diagonal pattern. So this third wave down should probably bottom out around there. 4,900, 4,920 is that support. Let's see if we get 5 waves down in wave 3, and then we look for a correction in wave 4. But overall, wave 1 in blue, so let's mark that wave 1 in blue. Wave 1 down in blue should target somewhere below the wave A high, so about 4,600 to complete wave 1 down. That'll be the target for this week. You can see the hourly count here in wave 3. It's so very tight. It's hard to actually parse it out, to be honest. If we reach consolidation on Monday, that'll be wave 4, and then we turn down into wave 5, towards the middle or end of next week. Let's see how it goes. Okay, so let's move on to silver. So we had a very close lower high. I was still counting this as wave 1 and 2, and we got so close to the previous highs that, it was a hair's breadth away from being invalidated. But still, 3 waves up. 3 waves up in wave in wave 2 in green, and looking for a third wave acceleration lower. And the action this week hasn't disappointed. During last week, we were tracking a possible wedge pattern down in wave 1 and a lower high in wave 2. And then we got the series of accelerations down this week into wave 3, 4, and 5. That could be wave 1 done. The break of the B wave low, that was like 30.80. That's what I was looking for in wave 1. We've got that, and some to go with it. So let's get. You can see on the hourly chart the wave one count is quite tightly bunched. So that does suggest something very impulsive going on here, and the very fact that we go to the 4 hour count here, wave one down retraced most of the previous wave two rally. So that was at 1 higher degree. So that shows you just how impulsive that action was, and how like a coiled spring this market was, ready to turn higher. Or sorry, to turn lower. I mean, if this is the third wave down, then we have a long way to go. That's only wave one of three. So wave 1, 2, 3, 4, 5. So we could probably retrace back below 26, maybe even back towards $20 again. Between 26 and 20. So a break of 26 at least in wave three down, and we'll see from there. We'll track it from there on how it's going. So this is a wave C. So wave A down into the 2022 lows, wave B up into the 2024 highs, and this will be wave C down, and the minimum target would be 1750. So a break of 1750 would be where we're looking for this C wave down to go. Sorry for all the bearishness this week, but at least for once I can say, that I think the winds of change are actually in my favor this time. So Godspeed to you all. If you've got kids, look at your kids, give them a hug this week. I'm signing off, and I'll see you on the website on Monday, and back for nightly updates during the week. All right. See you all. God bless. Bye-bye.